All right, what's going on, everybody? We got some pretty good requests for today. Get an opportunity to go through those. All right, what's going on, everybody? We got some pretty good requests for today. Get an opportunity
Sure, we got the
to
sound
go through
working.
those. Everything is functioning the way that it should. All right, what's going on, everybody? Just getting set up. Give me just a second. So we got two requests today. One's quick and easy. It's a new trader's perspective on putting together a watch list. And then the other one is to look inside of a book. And it doesn't really matter what book, the tactics that I'm going to discuss today, but we are going to go into a specific book, the Secrets of a Pivot Boss. And I'm going to show some tips and tricks on how I do this, right? Because I read, I watch videos, I study. I'm always looking for another tactic or approach to trading, a better understanding on uh, anything really, right? I am a firm believer that I don't know it all. And so, although I know I never will know it all, I do like to grow as a trader. And well, for me, that means continuing to read books, watch videos, and seek out new ideas. But we all got a life, right? We got to get out of the office at some point and do other things. So to me, it has to be done in a timely way. Otherwise, we would just spend all of our days with our head in the sand and miss everything, right? So the first request is about building a stock list. So the request that came in was, hey, give me a list of stocks that I can add to my long term portfolio. Well, come on, guys. That's a bit demanding, right? I'm not your on demand portfolio development portfolio manager, and you would have to pay me a lot of money to do that, right? There's also rules against that. I can point out trades that I'm taking. I cannot give you quote investment advice. That's a fine line in the sand. But just on its own, that's kind of a tall ask, right? Like I need to just drop everything that I'm doing and build your long-term portfolio. That's not what we're here for. Certainly want to help you do it though. So, of course, the follow up question that I had was, you know, what do you want to do? Because I can help you and teach you, but I'm not going to do it for you. And they said, well, I need a watch list of $30 stocks. $30 stocks. Okay, let's put together a watch list of stocks that are $30. What platform do you use? No idea. So here's some recommendations. You need a platform where you can put together lists. Found out that the person is using Robinhood. Robinhood is a smart system that actually builds lists for you, which is really cool if you're doing thematics. Say you want to do pot stocks or you want to do UFO or oil. It'll put together these lists for you in a smart, intuitive way, which is really great, but it doesn't really give you all of the nuanced features that you need. So it's a decent broker, it gets the work done, but how do you put together a list of stocks, for an example? You need a place to do work. So what I recommend is getting a platform where you can do that work. There's a couple of them out there. Preferably, you want one that remembers your settings, right? So y- you can use the free stuff, but the drawback is, well, it's free and it very likely won't remember any of your settings. And then you're going to have to go in and set it back up again every time you go to use it. But one of those is FinViz. FinViz is an all around scanner, screener, and it does a really good job, right? This thing has built in news. It will look at stocks from around the world. It recognizes candle patterns and signals like up channels, down thumbs. It's a really robust platform, and I like it. Even the free version can get you where you want to go. But again, having it save your work would be really valuable. So when I look at, buying something like this, I hold back because if I'm trying to put together a watch list and I want something robust and I got to spend money for it, then why not just go with something like TradingView? TradingView will allow you to build watch lists. It has scanners, it has news, earnings, background, government data, unique indicators, fantastic YouTube backdrop. So many people use this thing that if I'm going to spend money, this would be the way to go. I can't think of anything that I would want to spend money on to put together watch lists and do work other than to have something like this. And the learning curve to use it is really light, right? Like this is a very simple to use platform, all things considered. If you're willing to put a little time into it, then TD Ameritrade, Schwab, Thinkorswim platform, this is the way to go, right? I love this thing. It does all the work that I want it to do. I just don't trade here. I'm not happy with the trades, so I trade somewhere else, but I do nearly all of my analysis here. The problem is it's a really robust platform because it will do everything. There's a lot to learn, right? Thankfully, there's also a ton of videos on how to do anything that you want to do on Thinkorswim. There's videos that I've made, Lucian's made. I think every Bullish Bears moderator at some point has made videos on how to do something on Thinkorswim, plus their own in house videos. They've got a ton of them. So this one doesn't even cost you anything. If you want live data, I believe you have to start the account with at least $500 in it. But once the account is open, you can just pull your funds back out, maybe leave, 10 or $20 in it, and you still get your live data. I didn't have to go through that because I've been in an account holder before it went to Schwab. So they just ported me over from TD Ameritrade, but whatever. Having that live data would be really valuable. So Do that. You get free data. You just have to open the account with some funds to start with, and then you're good to go. That would be a fantastic way to get things done. And I love it. You need to be able to save your work and you need to be able to build on your work. So going to some free website and running a scan, yeah, you can do it, but you'll have to rebuild it every time. And it just sucks. There could be some free ones out there that I'm missing. So what I recommend is hit the Google, right? Go to Google if you don't like any of the three recommendations that I just put out there and search for stock screeners. I'll also mention there are a ton of apps that you can get on your phone for stock screening that are free. You can do option screening, stock screening, all kinds of things. So if you're using Apple, go to the Apple Play Store. If you're using an Android or whatever they're called, then go to that Play Store and just search for stock screener or option screener, whatever one you're looking for. And you would be amazed at how many free tools they have so that you can go in and you can build yourself a list and it doesn't cost you anything. Since the person mentioned Robinhood, I will also mention Webull. This is another one that can do stock lists. I gotta say though, I don't use this much. You probably want to ask Jeremy questions on this one, but it is comparable with Robinhood. It does a really great job. And then the one that I love, and I use this one constantly, is Public. Public is a broker that is really smart. So I use this to build my own trading ETFs. So like oh, what's it called? I put together a thematic list and it traded it. So the brokers, for an example, ICE, Hood, IBKR, Schwab. I built a list of brokers and I told the app, hey, every week pull money from my account, bring it into the software, and then use those funds to buy these stocks once a week. All right. It was like an automatic allocation of funds. I loved it. And I still use it. I love this thing. It'll do fixed income for you. Um, you can trade bonds, treasuries. It's awesome. And like right now, I've got all those plans paused, but I built an artificial intelligence plan, the Magnificent Seven, my bid on brokers, drones, quantum. I picked the stocks, I built the thematic, and I just told it what to grab. Less than $100 a week is what it was doing. It would just reach out, grab some funds, and then allocate those funds. This is an account that I started with $20, and it's just been growing and growing and growing and growing. All right, you can see the stock list. I was posting on this the other day. These are the losers right now. Those same brokers like the CME Group and ICE, they're not doing too good right now. But then there's the other side of that. Some of these are up over 100% and 177%. They're doing pretty good. So I like this one, and it comes with lists, right? It actually brings lists to you, like those thematics that I was mentioning. So you can go either route. You can, let Robinhood or Webull give you your list, or you can go in and use something like FinViz, TradingView, Thinkorswim. But my recommendation is, for goodness sakes, get something because you can't rely on reaching out to somebody and saying, build me a list, right? That you will lose money and you'll just continue to lose money if you can't do it yourself, either because you don't have the platform or you don't know how, or both. Learning how to do it starts with picking a platform. And it really doesn't matter which one you pick, but you have to pick something, right? So I'm going to use Thinkorswim today, but the settings, while they may look a little different, you'll do it the same way on whatever platform it is. Start with the pool of stocks. I have never once traded an option on public, so I can't say if they do a good job on it or not. I know that everything else public has done, they've handled it exceptionally well. I would have no qualms whatsoever about using options. I just I have my options broker that I like. It's tasty. I do my options trading there, and I rarely expand somewhere else when it comes to options. But I do like trying brokers, right? That's how I found public to begin with. I was just poking around, found a new broker, and gave it a shot. I gave it a shot because what I learned over the years is me asking somebody else, hey, what do you think of IBKR? Hey, what do you think of whatever broker? It just doesn't work. They either are not able to articulate to me the things that they like or they don't, or they're not intelligent enough to explain to me the nuances of the platform. And then I don't trust the person to begin with. Like, is this guy even know what he's doing? So I'd rather just go poke and prod and check the thing out for myself. But I've been like that from the beginning. That's why I have over 70 brokers and I've got over 160 accounts, and I just open a broker and give it a shot. And if I don't like it, then I don't fund it. And if I do like it, then I put money in it and grow it out. You know, Usually I start with $300. Some of them I start a little less, like the $20 in public. Some you have to start a little bigger. Um, I've had some that wanted a bare minimum amount, like $1,000 to open. So, it just depends, but I like starting them small and then growing them out. I get a certain pleasure in growing a $20 account out to a $2,000 account. It just feels good. I like it. So if you're going to build a stock list, it's good to have a pool of stocks to start with. Like if I just said stock price $30, that's going to bring me all sorts of trash that I don't want, right? Now, maybe I'm just being a bit picky, but do you want ETFs? Do you not want ETFs? What about ADRs like Canadian stocks or Chinese stocks, Brazil? Do you care, right? What about pink slips and, OTC stocks? Having a preference on the pool of stocks that you're going to be searching through will really help you save time so that you don't have to weed through a bunch of additional trash once you get the list. I told this to give me a list of stocks under $30, and I'm going to reset all this other stuff. In fact, let's just reset the whole thing so that we start from scratch and there's nothing that I've done to this. That way, it's a fair example of the point I'm trying to make. All right, $30. We end up with 15,300 companies or things. Doesn't even have to necessarily be companies, just things. 15,300 things that are less than $30. I don't know about you guys, but that's a lot of stuff that I don't want to have to go through. So we should probably narrow that down some. Well, one of the things that I like to focus on is whether or not it has options, right? It's not a big deal if it doesn't, but um, I like to trade stocks that I can defend with an options trade, so I tend to go that route. You could choose just things that are in the NYSE. That would knock it down to 1,300 stocks. All right, well, we're getting closer, right? And now we're looking at things that may even be recognizable, like American Airlines and ADT. So you need a basket of stocks to work on. I believe there's categories for just US on Thinkorswim. We want to go down to what they call public, and that's the ones that are pre-built for us so that we can just choose things that are already um, filtered. And if you look around, I know FinViz has US only, or you can choose, US and Canada. Same thing with uh, TradingView. It also gives you the opportunity to choose US or non-US. Thinkorswim does it too, but I believe they got it hidden in some little section or area. So generally, what I do is just focus on those optionable companies. If you don't want to go that route, pick your index. S&P 500 is a really good choice, or the NYSE like we did here. The NASDAQ 100 if you want to narrow things down even more. But this 1300, that's a really good start, right? Then you could go in and you could exclude things that are ETFs if you don't want ETFs, or you could filter it down into, say, market cap or volume on the day, something, right? Because 1300's still a lot of names. The goal of a watch list is specific to the person who's using it and their goals or their needs. My goal is usually to get the least amount of names on the screen, and then that is the list that I use. Other people are trying to actually build a list and they want to put as many names in it as they can find that meet their criteria. It's not about right or wrong, right? It's just about what's your goals. So if the goal is stocks less than $30, ta-da, we're done. And this is stocks in the NYSE that are less than 30. That's it. It's as easy peasy as that. Now, once you get this list, weeding it down into names that are bullish, names that are bearish. Some maybe have earnings or they just reported earnings. Do they have dividend or no dividend? Are they new? Are they SPACs? Those would be things that you would want to consider. But for just putting together a list, there's a list. I don't know why I just made that with that link. The person doesn't have Thinkorswim, they're not going to be able to open that link. Da-da-da. Got to go old school. All right. Got that done. That was Pretty easy. I hope they all go that easy. All right. So the next request was about a deeper dive into the book Secrets of a Pivot Boss. So I guess I misread the quote, but the comment, you said you thought it was a little strange that he focused on only a few candlestick formations in chapter 2. Why didn't he discuss others? I took that to seem like you thought he was missing things and that he was just, too narrowly focused. Because when I read a book, I don't generally sit there and say, well, how come they didn't cover this and why didn't they cover that and why is he only doing these two? So yeah, that's on me. I just misread it. You know, text is easily misunderstood. That's my bad. All good. So I put this together in about 5 minutes. Right, that's how much time it took. Um, this is a little cheat sheet off of the book Secrets of a Pivot Boss, starting with the trade types, wick reversal setups, extreme reversal setups, outside reversals, doji reversals. Those are the typical setups mentioned in the book. And then more specifically, the breakaway, the magnet, the standard third, standard fourth, and the Camarilla breakaway. With the description, of course, the pattern structure, the key psychology behind it, why exactly are we looking for it, and then some examples of these particular ones, like the risk blah, 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 wick reversal setup. So here's a bearish example. There's a bullish one, didn't necessarily work out that good, or a bullish one here, right? Worked through the day, anyways. Here's another example with an extreme reversal setup. You can see the ERS bullish or the ERS here bullish. To me, when I'm learning new patterns or I'm trying to get a feel for a strategy, I like to go back and find examples. And the more examples that I can find, the better. I want to see them work. I want to see them fail. I want to study where they failed and where they worked. I want to try it on different time frames. Does it do better on a 5 minute or a 15 minute, maybe an hourly? If I find them on a daily, can I use that for the next day's trading? Right. All of these things are things that I consider and I want to put my hands on it as much as I can. I mean, it's like the Rubik's Cube. I want to grab that thing and get my hands dirty. So finding examples really helps to better understand what it is that I'm looking for and to look at all the ways that it can appear, the ugly ones, the pretty ones, and certainly I want to see those ones that failed. It would be cool if we never had any failures, but we all know that's unrealistic, right? There's going to be failures. But when we can identify some common failure situations, then we can avoid those situations. Even though the pattern is showing up, we can say, yeah, yeah, I see the pattern, but I'm not going to trade it because these things generally mean that it's going to fail, right? Whatever that thing happens to be. So the more examples, the better. And finding it on different products helps too, right? So like I said, I threw this together really fast. It didn't take a lot of time, and it shows because well, there's not much to it, right? This is what you get with 5 minutes of work. The entry confirmation criteria, and then over here, this is where we start getting into the IB. Now, I've shared pictures of the IB before in the chat. That's one of the reasons that I like having the PDF book. I love the book itself, right? Like having one on my desk, it's great. I can just open it up and read it. But having the digital copy means that I can take pictures, I can copy the pictures that are in the book, I can, store them, save them, all that good stuff. So I highly recommend getting copies of these different trading days. If you have the real book and you don't have the PDF, scroll up in the chat. I've shared it multiple times. You can get it that way. You can also just go to Google and type in the kind of day that you're looking for, and you will find examples because people have made, oh, so many examples. When you are on Google and you are searching for one of those, make sure you choose images, right? So, when you first go to Google, it usually looks like this, and you don't have those choices across the top. So, if I was looking for something like a wick reversal, once I hit enter, now I can choose images across the top so that it's not trying to do all of this stuff, right? Instead, it gave me the description. It's great. I could copy that down, whatever. But to me, a picture tells the story. I can come in here and search and try to find examples of that wick reversal. Once I have an idea of what it looks like, I can then go out and start trying to find examples on my own within whatever market I want to look at, right? The Qs, the ES, blah, blah, blah. So use that image selection. That really helps. If we were looking at those different types of trading days, these are the types. Your typical regular day that happens most of the time, expanded, typical, trading range day, sideways days, double distribution trend day, and trend day. Now, me and this guy, we approached this from a different perspective. He leaned more heavily on the 9:30 open in his book. And I really like the overnight open, the 6 p.m. open. But we'll use what he uses in the book. And the IB is nothing more than an open range, right? So we can choose whatever open range we like. Me personally, I generally use a 1 hour open range, or I don't use time at all and I just use first pivot low, first pivot high. But if we were using the open range, I think this is going to default to 1 hour. Yep. There's your IB right there. There's your initial balance. It's just a 1 hour open. And he discusses in the book his logic behind even the name of it, the initial balance, the perspective of the market participants. That's not for us, that's for something else. That too. Close that. Don't need that. Got a bunch of stuff open. There we go. Close that. Don't need that. So is the IB really wide? Is it really narrow? Is it moderately wide? Moderately narrow? In the book, he talked about like a nightstand versus a coffee table, and the how the coffee table has that wide base and it's not very easily tipped over, as opposed to a nightstand or a footstool, really narrow base, easy to topple. Think of these types of initial balance the same way. If it's a wide IB, it's likely very hard to break out of that, right? And it's not to say that we can't, but because here's a wide IB, and well, we broke out of that. For me, though, if we were using the IB the way I like to use it, we would have been trying to narrow measure the initial balance from back here, from 6 to 7 at night, not from 9:30 to 10:30. Once we've established that the initial balance is broken, then we can lean into the rest of what the book had to offer, the trade setups, blah, blah, blah. Right. So it doesn't matter what book. What I like to do is open up a brand new Discord, and then I take that book and I rip it to pieces. I put every single chapter of that book into the Discord, and then go in and I try to highlight and find different parts of what that book was discussing out in the real trading world. And then I add those to the Discord. This Discord right here is the Art and Science of Technical Analysis by Adam Grimes. And I built this for his book, right? This one. I love this book. It's an old book. I'm sure there's newer, more popular examples, but I really like this one. And he talked about things that are very unique to him. I've never really seen anywhere else. So, first order pivots, second order pivots, that was a new concept to me when I first heard him talking about it. I had to go study it, and I needed to find examples of it. And especially when he's using soybeans as his example. Like, come on, can we use something a little more modern than bar charts of wheat or whatever it happens to be? This is second order pivots, third order pivots. So it doesn't matter if it's Secrets of the Pivot Boss or hit and run trading, whatever it is, you need a way to digest the information. I I know everybody reads differently. My wife loves to read, right? She loves to read, but she doesn't remember much of what she reads. And so she'll finish reading a book and I'll ask her to describe it to me, and really she can't. It's just the way it is, right? So if you're reading through the book and you get to the end of it and you're like, "Yeah, no, I don't I didn't retain anything." Got to find a way to keep that information in there. What I learned through psychology and what we work on through the education centers is that you got to move the information from the reading memory into your active memory. If you start working off of the information, now you've got a memory of doing it, of seeing it, finding it, marking it, analyzing it, studying it. And it's no longer just this thing that you read about in a book. It will help. I promise it will. Right. I've got a master's in psychology and I'm working on my doctorate. I'm telling you, if you want to remember things, you got to use the information. Right. And it doesn't have to be, you rewriting the book, but put that information to use. What's the old phrase? If you don't use it, you lose it. I have forgotten so much about things like trig and complex math and working on the oil field because I just don't do this stuff anymore. So you got to use the information. If you run across anything that you don't understand, Google it. Seriously, Google it, use AI, whatever you got. For these images, you might have noticed it didn't do a great job of showing me the one trade that I wanted, right? I asked for a wick reversal and I got a bunch of extra stuff. Right? That's not helpful. So, you know, you got to do a little weeding out of the trash that you don't want. And then when you're done with all of that, try the different platforms that you have to see if it may have indicators that you're interested in. For an example, the wick reversal. This is an indicator that finds that and marks the signal on the chart. Or the extreme reversal. This is an indicator that marks that on the chart, right? All of them, all the top ones that were in that list are indicators that are built on TradingView. Wick reversal, extreme reversal, outside reversal, and doji reversal. All of those. I think there are versions of this on there, but the ones that I was finding were leaning towards things like fair value gap stuff and not things like Camarilla stuff. So I'm not sure. I didn't have time to play around with the indicators that I found to see if they were the correct ones or not. But I know that these four are correct because it had the name of the book in the title. It said Doji Risk Reversal from Pivot Boss, right? Like that's pretty easy to figure out. It's the right one. So use those tools so that you can find previous examples to study. It makes it so much easier to learn a pattern if you've got examples of the pattern. I'm not suggesting that you use the indicator to help you find trades now. I don't recommend that, not even in a little bit. But to help you find old signals so that you can study them in better detail and on different time frames, these indicators are awesome for that. Take advantage of it. Um, it's absolutely possible that you could get these for Thinkorswim. Before attempting to build them on Thinkorswim, I highly recommend you check the internet to see if somebody already has, because it's a popular book. Thinkorswim is a popular platform. I would not be surprised at all if somebody somewhere hasn't already built them and gave them away. Please don't buy these indicators. Please don't buy them. I'm going to figure out how to get them built if we can't find free ones out there already. And if I end up building them, well, I'm giving them away because I'm not here to sell anybody an indicator. But don't buy them for goodness sakes. They're not worth buying. What is with these cars where you got to rent heated seats and power steering and power windows? I'll be damned if I buy a brand new car and have to rent power steering. I refuse. Absolutely refuse. I will not. And in I mean, I know I'm old and I'm stuck in my ways, but this one, the principle of it bothers me more than anything else. It's very frustrating. Right. Yeah. Sell me the one that has it all turned on, or sell me the one that has it all turned off and call it good. But don't make me pay a yearly fee to have basic amenities. That's just makes me salty. Arr. Yeah, that's what they say. So this approach to tearing apart and rebuilding a book will really help you grasp new concepts and techniques. And once you get it down, because we all have our own way of doing it, once you develop a style that works for you, you can get it done really fast. Now, I mentioned that I built this spreadsheet in about 5 minutes. Well, the way that I did that is I took the PDF book and I gave it to my most commonly used AI. And I said, here, take this book and give me whatever, right? So I used the what was asked of me. I would like to know more about the trade types discussed in this book. That's exactly what I asked it, and that was the answers. Yeah. Now, it would have been better if I had read the book first, right? So I have read this book. I own a copy, but I'm saying if somebody gave me a book that I had not read and I take it and give it to AI, that'd probably be a bad idea because I haven't even read the book yet. It can be wrong for all I know, right? It can be feeding me bad information. But once I've given it the book, I can ask it questions about the book. And that's really helpful because if you just randomly start asking AI off the cuff questions without giving it a source to reference from, it will give you answers from sources that you're not exactly interested in hearing from. Right? I don't want to hear from Fox, for an example, or MSNBC. So if you give it the book and then you ask it questions about the book, it's going to give you way more accurate answers specifically tailored to the source of information that you're both supposed to be looking at. And it likely won't go on a tangent and give you information that wasn't in the book, unless it's just the readily available global market knowledge kind of thing. This is a really helpful way to digest information that you're working on and get more accurate answers, right? Still doesn't mean it can't make mistakes. So I want to highlight that. It is a work in progress. All of these AIs are, they make mistakes just like humans do. So, it does help if you've read the book and you know that it's answering you based on the correct information. And if you need to, you can check it with another AI. You can explain what's going on to another AI and say, this is the answer it gave me. What do you think? Is that right? Is it wrong? Is it missing the point? And, make them work against each other. Oh, no, I like Notebook LM. If I want to digest something, just kick back and run a podcast of a book. I like Notebook for that. But in this scenario, somebody asked me a specific question and I just took it and fed it to AI. And it saved me an hour of trying to put all this material together on my own. It gave it to me in 5 minutes. I was talking to somebody the other day and I was like, "Yeah, I use AI every single day." And they're like, "What the hell for?" And like, well, you get tired of explaining the same thing over and over, and that's no fault of you guys, right? We get new people in, they ask questions. It's the same question somebody asked last week. It gets to be a little bit boring on my side. So I got an answer to that. Hit AI, give it to them. Or if I need to dial back the language to make it a little more user friendly to someone who's new to trading, so that I don't use a vernacular or language that they don't understand, I'll ask AI to explain it. Yeah, that too. It keeps my F bombs out of there. Take options for an example. They're complicated, and I've been trading them for years, and I talk about them as though I'm comfortable with them because I am. But I forget other people aren't so comfortable. And then I start talking about things that they have no idea what the hell I'm talking about. And I'm just basically talking right over their heads. So I'll ask AI to explain something and it will dumb it down, I guess is the night. I don't know. It doesn't sound nice when I say that, but there you go. It'll explain it in layman's terms. And then people understand what the heck we're talking about. So use these tools, right? Because they are out there and they will make your life easier. They will absolutely make your life easier. Oh yeah. Yeah, in college they made us go to school on how to learn, and that also involved how to do research. And at the time I thought this is really silly. We are adults in college. I would assume at this point that we all know how to do research. Oh boy, was I wrong. So knowing how to do research really helps. And if you don't know how to do research, you can actually go to YouTube and type in how to do research, and you can learn how to do research. Learning how to learn will save you time on learning how to trade. It's one of the reasons that I keep promoting the Discord as one of the greatest things that can help you improve your trading, is because it can help you get organized, store your information, put together your notes, educate yourself. It's so useful. Gather resources too, by the way. One of the greatest ones that I think most people don't know about is Google Scholar. So of course you got your regular Google. This is the white paper research of Google. The articles that you find here are peer reviewed, and they come from colleges, universities, law firms, all kinds of places. But it can't just be Joe Schmo in his grandma's basement pumping out just clickbait. It has to be peer reviewed, researched articles, and it covers so many topics, and it goes back a long ways. So that's really handy when you're trying to figure out, for an example, the law within the United States on a broker's obligation to report a trade. That was a really big thing to me when I was getting into volume, is I was noticing that trades were happening long before I would see the volume and the candles move. I was really frustrated. You just starting out in trading, everybody's talking about candles and blah blah blah. Then you start getting into the tape and time and sales, and you realize that those orders are coming fast, and the candles are playing catch up, and that there's quite a delay. 30 seconds is the law. 30 seconds. A broker has that long to report a trade and the time that the shows up on the tape, right? Well, then candles are the last thing, and the broker is not obligated to get the candles to move in line with the tape at all. They'll try their best because they know they'll lose clients if it's too laggy, but their only legal obligation is that the tape is accurate and that trades are reported within 30 seconds. Where did I learn that? Google Scholar. Oh boy. I feel you. Yep, I feel that. I don't miss trading on Thinkorswim. I did it first, but I don't know. Now when I have to go over there and use it, like today, we're gonna roll that trade. Um, I don't miss it at all. I brought up my raindrop. If you guys don't have one of these or something similar to it, this is a web page book. So it's keeping track of all the websites that I've gone to that I want to keep, right? So if I find a site that I like, I grab it and I stick it in here, and it's a site manager. And of course, I can name the categories and I can have subcategories within those categories. And it's absolutely fantastic. This one's called Raindrop IO. There's a lot of them out there. I've got the actual app on my computer. I just added the extension into this browser. But yeah, I love that thing. It's a real handy tool if you visit a lot of websites. You go somewhere and you're like, "Oh, this is great, but I don't have time to dig into this place right now. I'm going to come back here later." I used to say that, and then I would log off, go do something else, come back, and I would forget all about whatever place it was that I was going to go look at, and then I never go back and look at it. So I do. Yes. I cannot argue at all. I am a hoarder when it comes to information, and I spend more time than I think is fair organizing and referencing and cataloging that information. But along the way, it also gets moved upstairs into my head, so that's always useful. The eye doctor was telling me I need bifocals, and that's coming. I've got a pair of readers in every room so that if I want to say look at my phone, I just pull my glasses off and put my readers on and I look at my phone. And otherwise, if I'm just checking a message or something, I don't bother. And I'm not one to hang out on my phone for hours at a time. But if I'm going to be on there for a little while, I put the readers on. But that's getting annoying, keeping readers laying around. I'm only using like a I'm only using like a 1.75, I think. It's not even at a 2. I think that's the number. It's just the little ones off the shelf at Walmart, the little cheapies. So hopefully this gives you a better understanding of the book, the trade setups. You really want to me, you really want to see them, right? That's what makes them come to life. To find those old examples and to be able to dig into them in more detail on different time frames. So put the indicator on or read the description of what you're looking for and go hunt them down in the past. Mark those out on your charts and then review them. Get comfortable with the way that they look. And for the IB, I I know that the book talks about that 9:30 open as the IB. I just don't like it. I like mine. My IB starts in the overnight so that by 9:30, whatever we were going to do to that IB usually has already been done. We're out of it. We've gone up, we've gone down, or if we're still in it, then we've got the whole overnight session to evaluate what we did within that IB, and then we break out. Right. So to me, I did not use this book as a Bible to guide me to go forward. Instead, reading this book provided insight into those different kinds of trading days and some things that I might want to pay particular attention to, like where the IB lines are. That's really helpful to know. but I still lean on the things that I show every day in the morning briefing: pivot points, yesterday's high and low, and my 111, 1, 2, 3, 6 measured moves. The book might better describe why we turn at levels that we turn at, but I still use the tools that I use every day because I like them. So, as with any book that you read or video you watch, whatever, once you've absorbed the information, you got to find a way to use it, preferably not by mimicking the person, right? Because I have found over the years trying to duplicate somebody else's work, that has never worked for me. And every trader that I know that's successful has taken something and made it theirs. You got to make it uniquely yours somehow, right? You don't have to rewrite the whole thing, but adjust it in a way that suits you and make it uniquely yours, and you'll do so much better. Of course, I'm going to share this. There's nothing in here that you wouldn't get on your own, but I already did the work. Why not? Right? So let me get it shared. We're just going to call it a recap. It is an XLS document, but we're going to, but you should be able to open that in, you know what, let's just make it a PDF and then you don't have to worry about it. I was going to say you can open it with a Google spreadsheet, but if we make it a PDF, then it doesn't matter, right? Boy, that sucks. That is not what we wanted. Let's try that again. Nobody wants that. I guess we're going to go ahead and share it as a regular document. If you don't have Apple products or Windows products, then just use Google. It should open the book anyways, right? Because that's junk. This wouldn't do anybody any good. All right, so that's everything that we were looking at in that XLS document. Hey there, Putter Tat. The indicators, if you search for them by name as they were described in the first part of that list, you'll find them on TradingView. There was 5 of them, and I managed to find all 5 copies. So that'll make, you know, finding examples of the trade setups a lot easier. All right, I'm gonna log off and log back in under paper so that we can look at this roll position. Gold is holding its range really well. If you try to short it, approach with caution. We had that same sort of topping out pattern the last 2 days, and yet it has still expanded. If you're if you're looking at a short in gold, make sure you take a look at something like US dollar Japan because you should have Japan acting as a proxy and check the 2 year. In fact, let's just rip through the market real quick here. You got the Mag 7. Yeah, exactly. The It's easy to attribute it all to the shutdown, but Japan and that new prime minister that's coming in and Japan's new monetary policy is a very large part of what's happening in gold. They are going to join the rest of the world in the idea of expansion as a way to pay for growth. So, grow the government to make more money to pay the deficit of the government. So, Japan's looking to radically alter its landscape. Your hedge, huh? What were you hedging? We have a really good question while I'm waiting for Thinkorswim to load. Oh, there it loaded in the questions channel about the stock HIMS, HIMS. Now, this is a part of those GLP-1 drugs, and then of course they lost the right or the access to be able to produce that. But NVO and HIMS and what is it like VKTS or one of those guys? Um, they were all doing really good, especially when NVO couldn't stock it fast enough, and they allowed other companies to make its product. temporarily. While they did that, Hims exploded. Like this thing was just, um, yeah. But it has topped out, and since then, it's been in this really big range. Right now, to answer the question about is it possible to reach 65? Technically, yes, because well, price can do whatever the hell it wants. We've learned that a long time ago, and fighting that hurts. But if we look at last week's range, which is it's always my default thing is, where are we? If you look left, we're inside of last week's range. And there's a lot to offer on this weekly chart that gives us some information. When we dropped below $54 for the last 3 weeks, it has been bid back up again, right? This week, and this week right here. Every time we got below 54, they ran it back up. But 60 has been a definitive line in the sand as significant resistance. Once we get through that resistance, we've got another level right over here that we have to deal with, and that's 63.81. Both of those are going to make it very difficult for you to reach 65. Now, that doesn't mean that it can't do it, right? Because price can do whatever it wants. But now that I'm on a daily, you see how it gap closed back here? This is where it closed. It opened down here. It ran back up. It got the gap closed and then down it went. But it digested that move and now it's trying to work its way back up. A lot of analysts will argue that this gap technically isn't closed yet, or that's not a good way to say it. That the trapped traders here still haven't had their opportunity to get out of the trap. That's a better way to say it. So even if we do get above 63.81, we don't know how much liquidity there is up here that we're still going to have to deal with. And it's very likely that the first time we get into this area, we get sold out of it. In fact, just scroll back a little bit. We got into that area here, 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 and here. And every single time it hasn't held. Now we're all the way back at the beginning of the year. This is 2025, right there. So this year, every one of these attempts have failed. That doesn't bode so well this time if we even manage to get to 65, whether or not we'll be able to get above it. So, in the current trend, if you want to call it that, we're range bound inside of this mess between 50 and 60. And if I snap a Linreg, it would agree with you that we are moving higher. Right here's the Linreg. Just snap it here. You see it, it's definitely pointed higher. So we are doing that. But I think you're facing significant resistance at 60, 60 and a half. And if we can get through it, 64 will be a gift if you get that. If you get that. When we put it on the monthly, we'll see that that weekly line that I marked is also the monthly line, 60.55, right? And then that gap that we were talking about, or excuse me, not the gap, but the close of that other candle, the open of that other bar, 64.50. Yeah, that's the monthly level. So, we could get there because price can do whatever it wants. But one, I wouldn't count on 65, and two, I would be ready to take profits at 65 quickly. Open's another one. Let's go take a look at open then. Okay, on the daily, we've got the boss, right? Always just start with the boss. That happens to be this bar. We know that that bar is the boss because we are inside of it now for 2 days. If we look back a little farther, we can see that this is the candle of control, also called the boss. Now, sure, we've left that candle. We wicked out down here and we wicked out up there. but this is the range that we've got to get out of. So we got this smaller range here, this bigger range here, and that's just from the daily. We'll see if the weekly offers any more value than that. Yeah, we could add another box on this week's bar, but I honestly I think that daily did a much better job. Um, but yeah, I guess we could, we could mark that one. It does offer context so that when we come back in, it explains this top a little bit better. It is rejecting over and over again. And, looking at it, we've got to be very concerned about this topping pattern. Topping patterns usually break down, but they don't have to, right? They can go back to trend again. Sometimes it helps to put it on a line chart, but also to go in and work through every one of the levels. Come on. There it goes. Oh, yeah. Now you want to work, huh? Uh-huh. Just kind of read it out, to where you got your high and you broke this one. So you ended up with a lower low. Then you've got a lower high, a higher low, a higher high. And at this point, we don't yet have a lower low. We don't have a low yet at all, higher or lower. We don't know what it's going to be. By going in and walking through those higher highs and higher lows, that can also help provide some clarity. But a line chart really, it tells a story. When I first started trading, I looked at the candles and how much information they had, and I was like, "Wow, this is so awesome. Why would anybody use a line chart? That just seems so stupid." But now, years later, I look at a line chart and I'm like, "This is fantastic. I love this." They, yeah. What do you call that when you uh, go to the sweat tents and you get high and you sit in there and just sweat it out? No, there's a name for it. I don't know what it's called. So maybe it's not that, huh? But a line chart can really clear up some information for you. So if you're having a hard time trying to figure out how to read it, try a line chart because the worst that happens is you flip over and you look at it and you're like, yeah, no, that didn't help. All right, well, I mean, at least you tried. And then, jump back to whatever you normally use. The monthly is good when you're working on your top down. We can see that this has had a real problem. Last month was rejected. It was all from this pullback area right here, and we are still underneath that IPO price. I wouldn't be surprised if that's what we rejected off of. So there you go. Now we had a lot more clarity, right? Like, that's what we hit, the IPO price. Okay. So now we know 1070 is a significant resistance level and it's having a hard time with it. Now we come in a little bit deeper, try to analyze this last pullback, and there's our midpoint that we've got to deal with. Or we can just measure the boss bar, and that midpoint is $9. When we can stay above 9, it's likely that we can go up and challenge that IPO high again. But until then, I think getting through that $9 level is going to be the tricky part. It was a really clean rejection here, and it pulled back into this kind of a higher low zone. And then it tried to run back up again, got that higher high. It really worked yesterday to keep it. I mean, that's a heck of a struggle yesterday. And now here we are down again. But we're not outside of yesterday's low. So if we're using OCR type analysis, we would look at this and we'd say, okay, well, we got our higher low, and so far today, higher low. But after setting this high, we had a lower high. Now we've got a higher high. And so we could be digesting here, or it's doing something like this, and that little bit of a curl will come in if we got that higher low. If this ends up putting in a lower low, then that's leaning more to the negative side. But it's a heck of a digestion, a higher high. Yeah. As long as they're not eating Tide Pods, I guess it's all right. Right. Wasn't that the TikTok? For a moment, I felt like he was reminding me to come back Friday. And like, I'm old, but I'm not that old. I will remember to be here Friday. Maybe. So you're an alarm hoarder. It's a good thing. This year, we've been in a deluge of thematics. I know it's a real fancy word, but it just means trading in groups or categories or themes, which is where it comes from. I like themes, but we don't normally have, you know, 2 dozen of them going on all at once. This thematic list kind of ebbs and flows. And I know that there's, oh, traders with more experience behind them because, I've only been doing this 7 years, 8 years. You find someone who's been doing this 20 or 30 years, and they'll talk about the money flow and how, say, when Nvidia is down, Apple's up, and when Apple's down, Nvidia is up. And yet I'm sitting there looking at Mag sevens and saying, yeah, collectively the Mag 7 are up. So you can play your themes against each other, is what I'm trying to say. I'm not that deep into it. These are the themes that I'm in or that I'm participating in through the year. The hard part is trying to figure out where a particular stock belongs in a particular theme. For an example, nearly all of the Mag 7 have their fingers in multiple pies. They are into the uranium and energy space. They're all into data centers. They're all into quantum. They're a lot of them are into EVs or were. They're all into AI. They're all into chips. So it's like, well, shoot, what category do I put them in? So it can get a little tricky trying to deal with some of those monster ones like Apple or Google or Microsoft. And I just don't try that hard with those. But it's the other groups, they're the other names within those groups that can really help with some structure. So, under my industrial group, for an example, Teradyne Systems or Teradyne Incorporated. I don't know if this one's on your guys' radar, but it's been doing really good. Even the April lows, which is where we finally turned, that line in the sand has been the line in the sand, and it's just been doing fantastic since then. Got all the way back up here, broke that higher trend line. Now it broke this structured resistance, and it looks like it wants the highs up there, that 165 area. I like this one. It's a part of the theme in the same group as Tesla and Leco and Honeywell robotics. Rich Tech Robotics is another really good one. So this is a good theme, but it gets scary, right? I mean, when you got a stock moving like this that went from $2 to $7, it's like, okay, buckle up, baby, here we go. Then you got your slower ones like Costco, those guys, or Deere, Caterpillar. If you've been around a while, most of you know I got a love hate with Caterpillar. I love this company. I hate this company. I love it. They're doing really good, but if you look at Deere, which is considered its peer, DE, it's not so good, huh? I mean, like really not so good at all. And the differences between these two is what their focus is. So Caterpillar's been getting a lot of work with those SMRs and uraniums and power plants. And guess what? Those are doing really good, right? So Caterpillar's doing really good. Deere, on the other hand, importing its products from China, a lot of farmers use Deere, and farmers can't sell their crops because China's not buying. And then you got the tariffs and the cost of their products and fixing it and replacing it. And it's just a big mess. And Deere's doing nothing good. Right. Same, same companies, peers, two completely different charts. So themes, you know, a lot of times themes can help with your trading. And I like to trade stocks that have a theme. For one, the theme itself becomes my indicator. Like, well, pot stocks, for an example. I don't like to trade pot stocks until pot stocks are running. Individually, sure, Tilray, ACB, I'll pick one now and then, and give it a little run, maybe a day trade or hold it for the week. But unless the whole group is making a move, I don't really want to get that heavily invested into pot stocks because they just are turds and they don't do so good. But we used to say that about solar too, right? And then solar started to finally pick up and it's been running really good since that capitulation low on April 2, right? Or gold miners. And I warned you guys last year about gold miners. So, it's not a surprise now that every single gold miner company out there is making a move. But most of the time they're junk and you don't want to mess with them, right? You Oh, you can't see the document. Yeah, you know what you got to do? Um you'll either have to join our Discord or send me your email. You can email me and I'll send you a copy, right? Cuz I shared it in the Discord. Um Here's my email. I'll put it right there in the chat. Just, send me an email that says, "Hey, I want the doc," so I know who you are, and I'll send you a copy of it, and the original book too. Right? The original book is titled "Secrets of a Pivot Boss." So if you don't want to go that route, you can join the Bullish Bears and then come into our Discord, and you'll find the book in the chat. Either way, sorry about that. I didn't catch your comment when you said it. So themes, it can really help out, right? Um, and that's one of the reasons that I use Public. Man, Public has been fantastic for this theme idea, because I built these plans with the names that I want. Let's look at these brokers. Brokers have been getting their butt kicked, but I picked the stocks that I wanted, and then I told it how much money to go get every week from my accounts, and it would get it and bring it over, deposit it into the platform, and then allocate it into these stocks at the percentage that I told it to. And of course, I'm not putting big money in here. It was more of a, when I first started doing it, it was more of a curiosity than anything else, like, I wonder what it can do or how good it does, whatever. And I just set it up and it was doing good. So I added more groups and then I added more groups. And now I've got all of it paused It's not exactly the environment that I would want to go and add a bunch of more risk at the moment. But when you have a theme, you can trade just one name in the list, or you can trade all the names in the list. But it'll better help you understand what a particular stock is doing, what we expect out of a particular stock. Is it, doing good, not doing good? And for me, it answers a lot of those questions that I get from people a lot when they say, "Hey, what do you think of, ABC company? You think it can go higher than this or lower than this? What's the risk?" First thing I think of is, man, what's that group doing? Collectively, what's that group doing? Is it doing good? Is it not? Are interest rates bothering it? What about tariffs? Because it just shines a light, you know. With open, this one goes with Redfin. Do we not have Redfin anymore? What happened to Redfin? And Rocket. I think Redfin got merged, didn't it? Let's get since we don't have Redfin anymore, let's get some peer groups. We'll see what it can come up with. I don't do good typing and talking, so I had to just shut up and type it out. I had told it I'm looking for a thematic list on open. We want US based companies that have options and then to list them by market cap. I didn't get all wild with it, right? Just something simple and sweet. It should handle this, no problem. In the Discord, we used to have the command peers, and you could just put a stock in, call its peers, and it would give you a list of peers. That was fantastic. I loved having that, but it was attached to a bot whose services we don't have anymore, so we don't have it anymore. See, it has Redfin on there. I'm wondering why I wasn't able to bring that up on TradingView. Yeah, ZG. That's the one that I could not remember. ZG is another one. Xylo. So if you're trading open, you would very likely want to review these names as well. Not saying you need to trade them, but at least put them on your radar and see how they're doing compared to how your particular stock is doing. And if it's a situation like Caterpillar and Deere, where they are completely different, try to find out why it's different. I'll just take a picture of this and put it in the chat. The other one was hymns. That's right. Ta-da. Got to make our lives easier, right? All right, let's go in and look at this roll for the Intel trade and see if we have anything left that can be rolled. Because I'd rather roll other things, analyze the Intel trade, but not roll it yet, and then roll something else just so that we have something to roll. All right, we got that Google call. We got two meta spreads, and then we have the Intel call. So let's look at Google first. Now, what I like to do with a trade that I have on is ask the question, what can I do with this? And do I need to do anything with it? I mean, am I in the money, out of the money? Is it losing? Is it winning? And then what can I do with it? Well, I can roll it within the expiration that I'm in, up or down. I can roll closer in time and get some money out of it because time is money. If I shorten the days, they'll give me money. I can roll it farther out in time. That very likely is going to cost me money because time is money and I'll be putting time into it. But depending on where I choose, I can also go up and down as I go out in time. And or I can just add a short call to this long call and turn this into a short call vertical or a long call vertical. But when I go to roll it, what are they offering me? So by default, it's wanting to move us. We didn't want to analyze it. We wanted to create it. By default, it wants to go to April and land at the same spot. And it wants us to pay a debit of $1.75. Why? Well, let's look at April and see what it's trading for. We are on the 260. Here's the 260. Let's see if we can highlight that so that it's easier to keep track of. If we sell this and then buy this, there's a difference between these two numbers. And if we look at what the roll was offering, 1.8, 1.7, it's that difference, right? And that would just be moving the decimal over 1.78, 1.80. It's close enough. That's where this money is coming from. That's why we have to pay a debit because where we're rolling to is more expensive than the one that we have after we get out of it. But it also implies that our trade right now, that Google trade, really doesn't have much profit in it to begin with. So if we go in and we look, the trade price 17.9, we're down on it, right? The total P&L 77.50 negative. So we didn't have any profit in it. When we go to roll it, we're not getting any profit out of it, and we're going to end up having to pay money to roll to that spot. So this would not be a roll that I would want, right? I don't want to pay to roll this thing. So we don't want to go there. We could try to roll up or down the options chain out here. So instead of getting that really expensive 260, we could try to get something like the 280 or, something else that's cheaper. That should give us a credit. So April, let's just bump this up to 280. Aha, see, now they're offering a credit. But would we want to do that? If we're just looking at this saying, hey, I found a trade with a credit, ta-da, now I'm going to roll it. But we're talking about rolling out to 280 for April. It's 191 days. Can we even get to 280 in Google? Well, of course, price can do whatever it wants. That's only $36 away. It has an expected move of 51. We can make 36 out of 51 easy, no problem. But what would getting that credit do for me in my trade? Well, let's roll this and see what we end up with. It says a credit of 485. I guess we got to let it work. Let's offer a little bit cheaper if we can. Let's try 480. We're just wanting it to fill, right? So we don't care. Yeah, there you go. You offer a little bit of money, they'll take it. So that's our new position, and we filled at 480 credit. Well, what does that actually mean for our trade then? Because now it says we're still holding a long call for 1285. Well, I thought they just gave us credit, right? Why is it still a risk of 1285? What they did was removed that $12 from the cost of the trade. And so instead of our call at whatever it is, $18, $19, they took that credit off. And now our risk is 1285 instead of, well, that's what it is, 1285. They just paid us the difference between those two. That's it. So now you can better understand what you got out of that. And I keep arguing that this paper version is not how Thinkorswim does it. It's not how I remember it doing it. But we're going to lean on it because that's what it's still showing, and that's what we're just going to go with what it's showing. I think if you did it on a live account, it won't be this way. It's my sneaky little suspicion that it won't be this way. But I want to show you again and again and again, as many times as I can, these numbers and how to find the answer that you're seeing when they show a debit or a credit, and then what your new position is. And you're trying to figure out, what are they doing to my trade? And is it helping my trade? Is it hurting my trade? In this scenario, they took my 1765 and they subtracted that from 1275, whatever it was, and they gave us the difference in that in money. And now we've got this new position, and we quote got risk out because we were risking 17 and now we're only risking 1285. And since this wasn't even a profitable trade to begin with, it didn't benefit us in that way. Let's go look at Meta because it's actually a spread, and a lot of people will be rolling a spread, not a single. So we got two trades on here, one that's at the money and one that's out of the money. We're going to look at both of those. What color am I on? Oh, I'm not on a color. Okay. All right, we got our first one up here and our second one down here. So we'll run the second one first. This trade is at the money, just slightly out of the money. So we're slightly losing here. But if you look at that purple line, when I stop my mouse, we're only down $2.50. If we run up just a little bit, we'll be in the money. Now, every day that we sit out of the money, this is going to lose money. And of course, we can roll this trade, but I'm hoping that the other one is profitable so that we can roll one that's in the money and see what a in the money profitable roll would look like. All right, now this one is in the money. It was in the money to begin with. When we opened it, it was that one. We sold to open these. One is down 152, the other one's up 110. This should be a profitable trade, right? Let's look at the activity when it was that button stuck. Count statement, Meta, in the last 10 days. There we go. We don't need the canceled ones. We only need the ones that filled. It looks like we opened it for 247. Right? No, that's the wrong one. 805, this one, right? Yeah, 700, 680. This is the 700, 680. We opened it for $8.05 each. It's a $20 wide spread, and we got $8 for it. So if we opened it at 805 and we go to close it today, it would cost us 840 to close it. This is a trade that's losing. We're down 40 cents in the trade. So obviously we wouldn't want to close it today because we're losing. But what if we rolled it? Well, one of the things that we can do to roll this trade is we can roll just one leg, right? That can reduce the risk because we're making the trade smaller. And if we've got one that is profitable already, say the long put, for an example, if it's worth more now than it was when we got the trade started, then we can roll that one leg for profit and reduce the size of the trade at the same time. You understand why, right? If you look at this vertical that we got, the 805 here, we've got the 680 long. If the trade is losing right now, that means price fell closer to this spread and the short put swelled up, which we don't want it to do. It's making money, it's worth more, and that's bad. But the long put is making money because if Meta fell, that long put is profitable. We can roll that long put. We can get some of that profit to help us. So instead of rolling the whole position, we can just come in here and roll that one single put. Now, of course, it's going to try to turn it into a calendar. We don't want that to happen. And we want to go to 690. So change the price first and then drop the date back so that we would go from 680 to 690 and a debit of $4. Why a debit though? We got risk, we got profit in this trade. It should be paying us some money. See how Thinkorswim doesn't care at all about how much profit the trade already has. That's why I argue that it's not doing it because it's paper is what my thinking is saying. Yeah, it's up 75 cents or more. When we bought it, it was worth $33. So it's up 19%. Oh, that never mind. That's yield. That's not what we're looking for. But it's up. So we should get a little bit of money for that, but it's not giving you any money for it. But the logic is there even if Thinkorswim isn't recognizing it. That's what I would do to get some of the risk out of this trade. If I have one that's losing, this would be one way to do that. Take the one that's winning and roll it and get some risk out. This says we got to spend more money on this trade. I don't want to spend more money, so not going to do that. Instead, let's do both. We want to sell that, buy that. Got to do it manually. The roll is a little screwy. And we want to sell that and buy that. If we roll the whole thing, we can reduce risk, add time, kick it out, and it's still going to cost us that 410 in debit, right? But we got it shortened. We added a little bit of time to help the trade. The risk is less now since it's um, $10 wide instead of $20 wide. And so let's try to get that on. I want it to fill, so I'm giving away pennies. Come on, we're running out of time. See, it's got four legs that it's got to roll, so it's fighting to do all of that at once. Maybe I was too far away. All right, we'll just let it sit there. Maybe it'll fill before the close. Since every broker does this differently, you got to get used to your broker. Um, this has been bothering me for days now, and I think what I'm going to end up doing is I've got more than one account when it connects to Thinkorswim. I've got a Schwab account that actually has funds in it. This one I don't have any funds in it. I think it's got like 20 bucks in it, but I've got another one that has funds. So I'm very likely going to put a real trade on in that account, just like I did on Fidelity, and then put an options trade on with it so that we can roll it. Because I've just got this sneaky suspicion that these paper rolls are BS. That it's not, because I don't remember it acting this way when I was rolling on Thinkorswim. And it could be just that I'm misremembering and that I've been at Tasty too long. but it really feels like it's giving you this pie in the sky simple logic of just closing your current trade and rolling it out and opening the other one. And it's only showing you that simple math, which would be great if that's what it actually does do. But I don't think that's what it actually does do. So, probably before Friday, I'm going to put a trade on in my real account, not a paper account. And then we're going to go through that trade with a roll and see if Thinkorswim really does roll it the way that it does in paper here. But now we got this trade on, right? It did roll, and we can turn off this other trade and we can look at the April position. It shows that we have 550 in risk and 450 as possible profit, and we filled that with a break even at 695. So this trade did not take into account any of that money. It's still $10 wide. You didn't get anything out of it. That's why I call BS. That is not, it's not accurate. I don't think Thinkorswim is representing it correctly in paper. And I'm going to prove it, because if I can prove this, then you guys will know that doing it on paper on Thinkorswim won't help you at all. That it's not showing you anything that is even remotely accurate to a real trade, and that you just have to do it live to know what your trade is going to be. Tasty's so awesome. When you do a roll, it tells you exactly what you're getting, and then it applies that to the new trade. When I rolled this call, it said, "Hey, we'll give you $4 for it." Okay. I paid $1.50. They gave me 4. Now I'm holding a long call for 250 credit. It's fantastic. It's awesome. And I knew in advance when I went to roll it that that's what I was going to get, because they show all that information on the screen. It's beautiful. Most brokers, no. Most brokers will do what this says up here. This is that same trade, and it says trade price, debit 317, current mark 4. That's not my trade, but that's what a normal broker would show. And then I open this up on the side. Ah, there it is. Right now, this trade is up $651, and I'm holding it for 250 credit, and I've got 4 additional credit offered right now. So I could close it for 650, and that's not a bad trade from 150 to 650. It's actually ready to be rolled again, because Intel just keeps going. Not enough there to go to another roll, though. Not at the moment. Not enough juice in it. It needs to bake for a little bit. So by Friday, guys, I think I'm going to have a trade on in the live Schwab account. We probably won't have a chance to roll it yet because it'll be too new. Probably. But we'll see. I'm thinking something like Joby or one of those, right? Maybe a gold miner, maybe. But the EVs have been fun, and I'm not done with them yet. So maybe if that turns around. That's a whole lot of down today. Hey, they're down too because they diluted their stock. So keep that in mind. They did an offering and that whacked them. I believe that was the news. Yeah, they did a stock offering. So that can hold them down for a while, or they could bounce right back up again. It's hard to tell when it comes to those stock offerings, but they've been doing a lot because I could have swore they did an offering back here. Maybe it was back here, but I could have swore they already did that earlier in the last quarter too. Or is it? Maybe it's just me, but I don't know. It's worth digging into. So, guys, we covered how to do research in a book. It's worth really working on that because there's a lot of good books out there, but there's only so many time in a day, right? You got family and responsibilities and work, sleep. If we spent all day trying to read books, well, we wouldn't get anything done. And then we got to try to remember what we read and put it into actionable, usable information. And the best way I found to do that is to find those patterns on the chart and to rip those books apart in Discord. Take pictures, analyze them, go back and study everything that you can about when they happened and where they happened, and when they failed, what it looked like. So you got a really good idea when you're trading it, what failure looks like. So that you're not waiting on indicators or something else to tell you it's beginning to unravel. You'll recognize, oh yeah, I've seen this fail before. It looks just like it did the last time, and you can get out early. For the watch list part, it's a work in progress. I've got a lot of watch lists for a reason. Some are very specific, like the thematic list that we were looking at here. Some are based on specific criteria, like stock prices and whether or not it's optionable. But you could also put together scan lists that are capturing particular behavior, like the stock is breaking out or it's breaking down, it's above a 200-day moving average or not. Maybe it's a Bollinger Band breakout. Those work really good to bring something to your attention. But even with those, the basket of stocks that you're scanning in become really important. Otherwise, it'll flag something and then you go and look at it, you spend 5, 10 minutes, and then you find out, oh man, this thing's got earnings next week, or uh, it just diluted its shares yesterday, something. It's a SPAC, or it's not even a US company, it came from China or something. So spend a little time to consider what you want the basket of stocks to be, and then how you're going to filter that basket into actionable, tradable lists. We don't do it anymore, but I used to stream in the mornings and in the afternoons 4 or 5 days a week. I was streaming in here all the time because I was working here a lot more than I do now. And when I was doing that, we would bring up my Thinkorswim and we'd look at the Dow Jones, and I would just go down every single name in the Dow Jones, and we were putting trades on every name. The only two that we didn't put trades on was Travelers, and I can't remember the other one, but Travelers had no weekly options. I don't remember what the other name was, but it was also an options reason that we didn't trade it. Otherwise, we were going long, going short, or going sideways in every name in the Dow, carrying 60, 80, 100 trades at a time. And it didn't matter, right? Because running the beta weight portfolio. So each new trade was based on What do we need? More long deltas, more short deltas. That way, we didn't have to worry about hedging or protecting the portfolio in case there's a downturn. We just kept everything centered. Now, just because I don't do it live anymore, it doesn't mean that I still don't run that same kind of approach, right? Like it's just you can do that at any time because it's all just the numbers, right? You can just lean on the idea that these options trades have a statistical edge to them, and that as long as you're staying within the boundaries of the statistics, then if it says 80% win rate, you're going to win 80%. If it says 60, you'll win 60. The thing is, if you bump those odds in your favor a little bit, you can put on a 50% win rate trade with an 80% success rate or better, and they'll pay you for it, right? Because you get paid more when you use a lower percentage, like a 50 instead of an 80. So you can run an 80% win rate trade that you built using 50% statistics, right? That's why I build mine at the money. So I can get a 50-50 trade, but then I build it against resistance or support, and that puts it into the 80s for the success rate and cheat the system. So public Dow Jones. I mentioned the Dow because they're blue chip companies. They're usually household names. Most people know who they are. You got public CEOs like Jamie Dimon and those guys. They're not hiding in the shadows somewhere. They're very vocal about the things that they're doing, and the whole idea is that you bring up the stock, you give it an evaluation. What are we going to do from here? Well, I mean, there's only so many things price can do. It's going to go up, it's going to go down, it's going to go sideways. What's the most likely outcome in whatever time frame that we want to use? Say Apple by Friday, it likely stays under 260, right? Like that's a pretty good bet. Oh man, but what if I'm wrong? It might be a little fatalistic, but if it ain't going to work, it ain't going to work. And there's nothing in the world that is going to prepare you ahead of time to tell you that it's going to work or not. I know that doesn't sound good, right? But once you've done everything that you can do, it's out of your hands. So the things that we can do is A, don't trade trash. B, don't trade things that are not liquid. C, avoid earnings and avoid dividend. If you do those things, the rest will just work out on its own. But one trade one time is worthless, right? These are statistical probabilities, and you don't have averages and statistics if you just do it once. That's just an occurrence. We got to have repeat trading activity. And one thing that Tom Sosnoff said that really stuck with me is you have to have occurrences. Trade often, right? Trade small, trade often is their mantra. It's what they lived by. Put on as many trades as you can put on and keep them as small as you can keep them. Because the odds are, if you're running the statistics, that you are going to win more often than you lose as long as you stay within the boundaries. With that in mind, there's a book that really helps talk about those boundaries. It was written by Gerald Appel. I've shared it in the chat, and it's just called Technical Analysis. And it's an old book, but don't let that steer you wrong. What the book talks about is looking at the Fed, looking at treasuries, the dollar, yields, and the S&P and the Nasdaq. And if they are misbehaving, then you shouldn't be shopping around for new trades, right? Or you should be looking at defensive sectors versus offensive sectors, that sort of thing. And that when we're in a high risk environment, you shouldn't be looking for new trades. I think right now fits as that category for we're in a high risk environment. We got government shutdown, Japan's about to start raising rates like crazy. An entire global regime change is happening. France doesn't even have a government. There's all kinds of things that are going wrong. It's not necessarily a good time to just go shopping down the Dow Jones list, getting into everything that we want to pick. Plus, we're going to kick off earnings season in 3 days, and we're getting really close to the next QRA event, which I don't even know how that works when we're in a government shutdown. I have no idea what they're going to do with QRA. Quarterly refunding, rebalancing. Rebalance what? They don't even have a budget. I don't know how that works. So you can do it just as easy as that, right? That every single name on the list, they're like, okay, well, these are all Dow Jones blue chips. Apple, we would just run in and put on one either at the money or near the money because it's in a range, it's not running. We wouldn't want to buy a call. It's not falling down, it's setting higher highs. We wouldn't want to buy a put. So a short call vertical looks good, right? Keep it under that line right there or over. And you'd be surprised at how fast you can start getting these on once you get into it. The line in the sand for this, we can just set that out on the charts once we set it on break even anyways. There's our line in the sand. We need Apple stock to stay under that price by expiration. 258.06. No, that ain't right. What is that? 258.65. If it stays under that, we can make $1.16. What are we risking? It's a $2.50 wide trade, and we got one, let's call it 115. Then we're risking the other part of that, which is 110. 110 and 115 equals 225. That's almost a 50-50 risk reward trade. And we're doing it against resistance, and that adds to our statistical edge, our edge, not their edge. Guys, it's after 4. Let's wrap it up. If you guys got questions, as always, throw them at me. I love the suggestions because I've always got topics, but I would rather do topics that people have asked rather than me just bringing in a topic out of the blue. All right. So that's it. Hit me up if you got questions, if you have topic ideas. If you're listening on YouTube, stop into the Discord, stop by our website. We're here to help, and we like it. It's always fun helping out. Let's make some money too, right? Got to make some money. I'll see y'all in the morning.